Right now, Wall Street is facing an internal war over AI investments. The advancing technology that once powered the stock market seems to be stifling it at the moment. You see, investors are dumping AI shares, and it's dragging down overall markets. From software to real estate, the fear of AI disruption has gripped multiple U.S. sectors. Ines Ferré is a senior business reporter for Yahoo Finance and joins us now to help make sense of all of this. Ines, good morning. Some people might say the sky is falling when it comes around AI. Some have called it a bubble. Maybe this is a correction. Help us understand the immediate impact and what industries are being hit by this sell-off.
Well, we've certainly seen a sell-off in software stocks over the last couple of weeks, also going into other areas as well as wealth management, logistics, a slew of sort of sectors that have been impacted by this. And part of this has to do with the fact that you've seen some AI tools that have been released in these industries. And so that's making investors think, could these businesses be disrupted? So it's twofold. Could they be disrupted by AI tools where customers, instead of using legacy software, use internal AI tools instead? And the other thing is that it is the barrier of entry of these for these industries, is that being lowered because of AI? So, and that would then implicate margins, less profits, and margin collapse, really. And
the alarm seems to be that if what you've laid out is accurate, if AI could replace these other industries, does that mean these industries might be wiped out? You know, you've got some on Wall Street really calling these scare trades. It's a knee-jerk reaction. It's emotional. It's not based on fundamentals. Fact check that for us. Are these industries at real risk, or might this just be a small blip?
Look, Wall Street is saying that it is a knee-jerk reaction, that this is overblown, that, for example, software is not going anywhere. This is not going to be an industry that disappears. You will have some winners and losers, perhaps, and companies that need to pivot. But Wall Street sees this as these companies are going to be utilizing AI to make better services, to offer better services. So they aren't necessarily going to disappear. There may be some adjustments, but this does not mean that they can't coexist. They see a world where these industries will coexist with AI.
And then what does it mean to our viewers? For people, I mean, there was a Wall Street study that, an Oxford economics study. It showed 20% of U.S. jobs are vulnerable because of AI. So for people watching this, what does this mean?
Yeah, certainly the scare is that you will see less people being utilized. I mean, you can do more with less. You even had Mark Zuckerberg during Meta's earnings call recently talking about projects that used to require perhaps a team of people can now be done with one person with AI. So certainly Goldman Sachs also has a study out talking about the fact that you will see some disruption when it comes to jobs. But when you have technological advancements, that means that eventually other jobs will be created, jobs that you and I can't see yet, that will be created in the future. And so people who can retrain, who can utilize AI tools and who can pivot, those will be the ones who benefit from those jobs in the future.
Another example of why it's important to always be flexible with your professional path. Ines Ferré, thank you so much for being with us this morning.